Yo, what's up you guys? Welcome back to another video. And in today's video, I do want to educate you guys on what is sentiment data, how to use it, and also what is order flow data and how to read it there as well. If you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please consider smashing that thumbs up button for the YouTube algorithm so that we can educate more people out there as well. Before I continue, I just have a very good question that I got from one of the gentlemen over here. Mr. Zondo asked, "Hey Rolio, you said that it took you about 7 years to become profitable. If you could go back and give yourself one piece of advice to speed up the process to be profitable, what would it be?" And that is probably the same advice a lot of people, it's the same advice that you get when you go and look about how to work better with your money. And then you always get this: you need to get a budget, you need to work with a budget. The most important advice that I can give myself or would have given myself is to invest in trading psychology and risk management, and not go and look for the best skill, or like we call it, the like the golden piece of rule, or that is going to help me succeed. So the best advice I can give everyone is focus on overcoming trading psychology, and then also risk management is very important. If you can grasp that too, then you have no problem. If you're the same type of person who works out a budget after you pay his salary, you'll understand how important it is to work with their money also. Now let's jump straight into the information. The first thing that we are going to speak about is called Forex Sentiment. Now, you've heard about smart money, you heard about smart money, you heard about the big banks, hedge funds, institutions. Now, the big banks, hedge funds, and institutions has got their own set of order flow data. This data provides us with information in terms of buying and selling positions. It tells us the amount of positions that these big speculators in the market are using. The Forex sentiment data is used to tell us how many retail traders are long and how many retail traders are short on the same currency pair. Now, the difference between the order flow data and the sentiment data: order flow data is used as a standalone. So when you look at the order flow report, and I will leave a link of a group that compiles these reports in the description below, and you can just go over to their channel and you can go and view it. Now, the way you would read this report: each report has got their own currency on it. This one is the dollar index. You'll get the euro, you'll get the GBP, so you'll get basically each currency set, and you should be able to read through them individually. Now, the way this would work is if you, let's say for instance, we're looking at USD CHF, right? Before we get there, we need to understand what the biggest speculators are doing in the market. But before we get even there, it's important to understand that this report is delayed, because it's an indicator. All the indicators are delayed. So this report is delayed as well. Why do I say so? This report is published on a Tuesday. So the report that we're going to look at today is the report for last week Tuesday, that was published last week Friday. This Tuesday's report will only be published on Friday, and that positions would have already played out in the market. Now, I know there's a lot of people that sound smart on YouTube using this report because it looks very fancy, but ultimately, this is the last resort of information that you can come and have a look at if you do make a trading decision. And no, you cannot use the report as a standalone strategy, because I see people are saying that there's a order flow strategy. There's no such thing as that. The easiest way to read this report is to look at the change in longs and the change in shorts. Now, if you look at the date over here, you'll notice that these dates are set week over week, and this is the report for the 6th of December. Now, if you go at the calendar, you can see there the 6th of December was last week Tuesday. Now, tomorrow there's a new report, but the one for the 6th of December gets published on Friday. So what's the point? Like, what's the use? Because the report's only coming out in 4 days. So why even look at it? People look at this report to give them some sort of comfort that hedge funds is potentially still moving in that direction. But that's not the case. And that's why I educate people to not focus on this report that much. But a lot of people had asked me if I can explain how to read the report. Now, like I said, the easiest way to read the report, my good friends, is to always just look at the previous week's data. So if you look at the 29th of November, what you'll basically see here is hedge funds, they came in, they added 37K buy positions, which is also known as long positions. They also added 12,000 sell positions, which is also short positions. But we're not going to look at that data. We're going to look at the most recent data against the previous week's data. Now, instead of grabbing a calculator and calculating this information, you basically just look at the change in long and the change in short. The change in long and the change in short will tell you what the difference between this week's report is and last week's report is. And that information will tell you whether they have added more buy positions or more sell positions. So if you look at this report over here, we can clearly see that hedge funds had started closing their buying positions, and you can see here's a negative 1K. But we can also see that they have also closed their selling positions. How do we know this? Because there's a negative sign in front of the 1K and the 1K on this side, but also the difference between the previous week's report and the new report is 1,122. So if you took that and you minus it with that, that's the calculated Excel formula for this report. It's basically that minus that gives you that. So that basically tells us that they are closing their buys and they're closing their sell positions. Also, if you get a report where they are both closing sells and buy, what you do want to make is that you want to come to your overall net position. So this gives us the overall of the report, and you can see that the overall report is sitting at a -6. And if you do go look at the dollar index, you'd probably realize that for that week the dollar was quite bearish. So if you go look at this is basically what happened last week. The dollar had moved sideways, but you can see here that the dollar has, well, investors has started to close the dollar index. They started to close, the net positions started dropping, and we could see how the dollar index started moving, this move to the downside. But again, we cannot use that as a standalone indicator. So the only time we look at the overall net positions, which is in here, is when there's a negative for the long and there's a negative for the shorts as well. Now, let's say, for instance, you want to look at Euro USD. You go and you open up the Euro report and you look at the dollar report. Then what you look at is which one is, where investors are adding more. Are they adding more buys? Are they adding more sells? You could see more sells here, you could see more buys there. But to not confuse you, if you see that they are closing their buying positions, if you see that the overall net positions are dropping, and if you see them closing their buys, and they may be adding some sells, then that they are, that they're not interested in buying the dollar, and this means that the price of the Euro USD will then increase in value. Now, I hope that made sense to you guys to understand. Now, that is order flow data, and that is the easy way to read it. If you didn't catch it the first time, I suggest you just rewatch the video again, and you could potentially slowly get the message there as well. Next thing we are going to look at is Forex Sentiment data. Now, the first one that we did look at gave us a broad indication of what the biggest speculators in the markets are doing. The Forex Sentiment data tells us what the people that you look up to who trades demo accounts on Instagram, this tells us what they're doing. But it's not what they're doing because they're not trading real money. This is actually what you are trading because you trade with real funds. So this is your accounts, not the guy on the car, but this is actually you, because we know the followers trade with real funds, and then the flexers, they flex with fake funds to get the people to trade with real funds. But that is a video for that's not my category. So Once you get to this report, this is called a Forex Sentiment data. This is basically retail trader positions in the market. And this tells us what retail traders are doing in the market. And this is called myfxbook.com community outlook. You just come to FXBook, go to community, and you go to sentiment data. Now, this report's very straightforward. As you hover your mouse over any currency pair, you will notice there is something called a symbol, which is the instrument, also action, whether they're buying or selling, the percentage, and the volume positions. We don't care about the last two. The only thing that we do care about is the percentage and action and the symbol, because we need to know what it is that we are looking at. Let's assume that you've looked at fundamental information and you see that things on the dollar is quite bullish and you expected the dollar index to increase in value. So by definition, all currencies trading on the spot trades against the dollar index. So when the dollar index increases in value, you by definition expect Euro USD to weaken. What you do is you then looked at the order flow data and you realize, oh my God, this looks like they're buying the dollar index. And please don't bet your life on that order flow report, because it's the last thing that the report is so delayed. Now you come to the dollar index report over here and you see, oh my God, the dollar is coming, testing at support. Now the last thing you do is you come here and you see that retail traders, they are buying Euro USD, meaning they're saying that the euro is going to increase in value against the dollar index. Now, remember that retail traders are most of the time wrong, meaning that, remember, the people that you are betting against in the market has got millions and millions and millions and millions and millions of money. And you are betting against people that doesn't want to lose money. So it's a game between sentiment and order flow. Now, what you see in front of you is retail traders battling themselves out. Order flow is just sitting there. One thing that you have to keep in mind is, remember, these big banks, hedge funds, and institutions, they know exactly where your positions are in the market. Why do you think your stop loss hit and then all of a sudden the market says, it's fine, we got what we came for, let's go? Because they know exactly where your positions are in the market. The best way to trade that is to wait for the liquidity hunt to get over and then trade a breaker structure. But if we have to go back to what I was saying, is that if you get into the market, you are playing against very big money guys. And these guys don't like to lose. What they do is create the expectation of a bullish or a bearish market, where the market creates a double top at resistance. And then your favorite mentor is sitting there saying, guys, I can see it. I told you it was a sell. And then the market says, well, guess what? It's not today, my friend. And it just breaks right through resistance, retests, touch support. And your mentor says, you know what? Guys, that's how the market goes. And, always that story that comes there afterwards. But you come here and you'll always want to be on the opposite side of what retail traders are doing. Why? Because this gives you an indication that the smart money is on the lower side of this report. So if you look at this report and you haven't guessed it already, smart money is definitely looking to short Euro USD longing Euro USD, because there are 68% of retail traders looking to sell it. So they're more likely going to move the price of the euro up and hunt as many stop losses as they can there as well. And that is the only way that you look at it. Though whichever one's got a higher percentage, smart money is always on the opposite side of what the retail traders are doing. My friends, I want to say thank you so much for your time. That is all from my side. And as always, cheers for years.